Okay, what is going on, CYPRX advanced YouTubers? Welcome back to another CYPRX YouTube video breakdown. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, you all have a Gbpjpy Zoom call that I did with the students, breaking down in extreme detail how we placed a profitable trade on Gbpjpy. I cut the video short, so you're not going to get all of what I gave to the CYPRX students. However, this is one of the trade breakdowns from this week, going over in extreme detail the CYPRX strategy. So I hope that you guys enjoy this video breakdown. If you do, smash that thumbs up button. It helps boost the YouTube algorithm, and don't forget to subscribe to the channel. Without further ado, let's get started into today's video.
Okay, so first kind of confluence that I'm going to kind of talk about surrounding this trade entry was way back a couple weeks ago, where I just pretty much told you guys, like, my perspective on GJ is always not necessarily bullish, but I always look for buying opportunities, because deep down in my heart, from my personal perspective over trading GJ for the past 3.5 years, it's been my main pair. I'm a buyer, right? I love buying GJ, and I know that the Great British Pound is such a stronger currency than the Japanese yen, and that 90% of the time investors are only putting their money into the Japanese yen in time of crisis or uncertainty in the market. Okay, so I had mentioned to you guys about the fundamentals surrounding GJBs and the Bank of Japan purchasing GJBs all the way up here at the highs in April, the market tanking, respecting that overall narrative from when the Bank of Japan buys GJBs, the market appreciates in value temporarily. Now, the only other thing that's concerning me about all of this price action is this nasty amount of liquidity that we've been calculating on for the past couple of weeks now, at around 160. So I utilized that catalyst. You guys can see here on my higher time frame over on the left hand side of my screen, I have the 4-hour chart. I have two psychological levels marked off in the form of candlestick body formations on the 4-hour chart, and that is the 159,800 psychological level and the 160. So as you guys can see, since around April, let's just say the beginning of April, we've held that level. We broke back above that level, and then when that news came out for GJBs and government bond buying for the Japanese yen, that is exactly where the market pulled back to. So collectively speaking, respected the higher time frame discount narrative. Anybody that was in buy positions down here on April around 26th, 27th, caught a nice rally move to the upside, rejection of that psychological level 160. So I was sitting there saying to myself, on the higher time frame, 4-hour structure, current market structure, what it is telling me is that this could be a potential reversal area. Now, that's not to say that it is, but I was willing to take the necessary opportunity and leverage positions to kind of react to the market if that was a possibility. So what do I mean by that? We see here that this price action structure was broken on the 4-hour chart. So because of current market price action information, we have to assume that because this low down here on the 4-hour chart held, we are in a discounted area or a potential region where on the higher time frame, the market could decide to hold and utilize this area as a supportive region again, right? We know that support resistance don't exist in the market. What are the banking institutions doing if they purchase from these levels? They saw that as a discount from where they purchased from previous to this area, and they're utilizing that as a catalyst to liquidate positions from leveraged sellers, okay, to create liquidity beneath lows and send price higher on the higher time frame. We know that banking institutions like to trade off the 4-hour and above, right? So just kind of, what I'm attempting to do right now is piece to you guys my entire thought process. Everybody thinks that trading is just about your technical analysis in the moment and reacting to the market. It's not just about that. It's also about how you see the markets from a logical perspective. And instead of thinking, okay, I'm bullish or okay, I'm bearish, you're kind of trying to milk everything together that you possibly can to give yourself an edge in the market, right? Whatever your edge is, whether you're a seller or a buyer, you're trying to back yourself up in this market. You're alone, you're out here. This is a fucking cold ass world, guys, okay? Even me as your mentor, I can't sit here and feel pity for people that constantly lose back to back and back. Emiliano, how many times have you messaged me and said some shit and like thought you were going to get some kind of like supportive emotional response from me? And I'm just like, hey, bro, this is what you're doing wrong. This is what you need to continue to do positively in a positive light, right? I can't sit here and carry you. You have to make an executive decision as an adult to stop doing something and do something different, if that makes sense. You know what I mean? So it's like, if you're not bundling everything together in your arsenal that you possibly can, then you're risking your capital. And as an adult, you have to understand that that could result in an indefinite loss in money. You know what I mean? So in doing this, guys, I'm just attempting to give myself an edge. That's why I'm starting with the top-down analysis. So now you guys have my 4-hour perspective. You guys have my bearish price predictions. But right now I have some levels marked off. And where those levels were was the 160, 159, 800. Those were my areas on the higher time frame where I was looking for discount buys, taking my Fibonacci on the higher time frame just from the lows to the highs and extending that over. You guys can see my analysis, right? So having that catalyst, now let's go down to the 15-minute chart. So my bias was higher time frame 4-hour discount in this general area or vicinity near these purple lines, okay? So these two purple lines are my higher time frame markups. Coming into the 15-minute analysis, we can see that Asia session, because I was trading this London session and this New York session, created a new A to B move, or at least same pattern that the 4-hour was telling us is current market structure prior to the daily candlestick open had been broken. And we know that the daily candlestick is created in this general vicinity. Well, 9 times out of 10 in my past experience, when the daily candlestick price action breaks lower than the daily candlestick and starts to make lower lows, lower highs, lower lows, blah, 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 underneath of where the daily candlestick opened, we can assume that what? Bank and institutional traders are taking higher time frame short positions, right? The market is then selling off. Whereas vice versa, if we break above that daily candlestick open area and price momentum holds above the level or the A to B move that broke the daily candlestick area, then we can assume that until this level is broken, we are on a daily candlestick discounted area and that the market is going to continue up. So coming into this London and New York session, I had anticipated that, and that was my bias now on the 15-minute chart, was that we were operating inside of this A to B move. And I have those highlighted for you guys on the 15-minute chart with 2 CYPRX green dots, okay? So higher time frame discount coming into this London session. I was looking at this Asia session as an A to B move. I also saw this on the 15-minute chart. The pattern that we stem for is a grab liquidity beneath the manipulative areas during Asia. So we can see if we were to draw an Asia manipulation range box right here. Right, cool. And then we see the market show us a willingness to grab liquidity from lows and make new highs. So I had that mindset coming into this London session, and I did the advanced 15-minute tracking where I just highlighted the and extended that over to identify Asia session lows, okay? So my first buy position, now coming over here to the fractal nature of things, we'll go to London session, was this general area right here. And it was outside of the manipulation window from around 6 a.m. to 8:30 a.m. London time. So I utilized that as a confluence to my trade, okay? So that's one confluence on the lower time frame. You guys have all of my higher time frame confluences, okay? Now my lower time frame confluences were a break out of the manipulation region. If you can see here where my cursor or my crosshair, okay, right here at around 160, let's go to 600, around that general vicinity, okay? On the higher time frame, I was taking this as a 62% discount entry. So right here, if I take my Fibonacci from the lows to the high on the higher time frame and extend that over, you can see here how on these 2 candlesticks, it taps into 62% discount. So if I correlate that, copy, clone, sync to the higher time frame, this entry right here was a higher time frame 62% discount entry. Can you guys see that? Okay. Can you guys see how on the higher time frame when price action was here in this general vicinity? Let me replay this for you. Okay. This was what I had in price action. This is what I saw yesterday or last night when I was trading London session. I took my Fibonacci from the low to the high. Fractal price action was showing me the failure to break the psychological level 600. Okay, you guys can see that psychological level right here. Here's the 600 level. We had a failure to break that. We came back into that psychological level 600, and then we created a fractal break in structure right here. Okay, so once I saw that fractal break in structure, same pattern that I'm seeing on the higher time frame. Now you guys can see that, like, literally, look at the pattern is literally identical. We see liquidity. We see liquidity. We see the market grab liquidity and make a new high. Same thing here. We see liquidity. We see liquidity. We see the market grab liquidity and make a new high. It's the same exact pattern, okay? So all I simply did on the higher time frame, taking my Fibonacci from the low to the high, On the fractal nature of things, I took my Fibonacci from the low to the new structure high, extended that over, and waited for 100% discount to tap back into the 62% discount on the higher time frame. And look what we got. We got a nice bullish rally up into almost the 50% discount. I took profit at around 20 pips for this trade. So that was a 1-to-3 risk to reward ratio almost to the T. The trade resulted in a 24 pip move. My stops were at break even at that point. And overall, I'm not going to lie, for this trade entry, I was targeting the highs above London, but we never got that. Okay. So you guys can kind of see how me partialing out and taking money from the market enabled me to make this a winning trade. Does this kind of disclose to you guys why I'm always teaching you to take profit? Because more price action or premium price is not guaranteed. Same thing as above, so below, discounted prices are not guaranteed. What was guaranteed to me in the market when I was sitting in 24 pips? Can anybody tell me? There's two things that were guaranteed to me in the market when I was sitting in 20 pips in profit. Can somebody answer that question? Here, I'll say it one more time. What two things were guaranteed to me when I was sitting in 20 pips in profit in this trade right here? What two things? What two variables?
Either you take the 24 pips or it goes negative. Lose them.
Okay.
Win trade and
Okay.
maybe
You can cover it. This is us. This is a game. Good job. Okay.
logically.
Yes. Good job, guys. I like your answers. I like your answers. So number one was obviously the amount of pips that I was up, right? 20 pips. I was up 20 pips. That is guaranteed to you in the market. That is not uncertain. Remember, I told you guys at the beginning of the Zoom call, we are operating in an uncertain environment on a constant basis. So your goal as a trader is to make this environment as constant as possible, okay? So 20 pips in the market was guaranteed to me. Another thing that was guaranteed to me was that we just broke a fractal structure high, and we do not know if the market is going to grab liquidity from highs in reverse or grab liquidity from highs, pull back, and go higher, okay? We don't know if the market is gonna grab liquidity from highs, pull back, and go higher, or reverse like it did, okay? So these are the two things that are uncertain in the market. So the second variable that was guaranteed to me was that I could protect my capital, which was moving my stops to break even. So you see here, as a trader, you're amazing and phenomenal. Yeah, that's why you're gonna get a fucking yacht one day, straight up. Just because you brought me Starbucks coffee and banana nut loaf, one day I'm gonna surprise you with a yacht. I'm gonna be like, hey, remember that one time you bought me banana nut loaf? Yeah, this is for that one time. Thank you, love you. All right, so check this out. So now you guys can see my higher time frame bias, 62% discount, how that correlates with the lower time frame, okay, and how my higher time frame bias kind of backed my confidence in this trade.
Okay, I hope that you all enjoyed the Zoom call breakdown. If you did, make sure that you smash that thumbs up button on your way out. Don't forget to subscribe to the YouTube channel. As always, be cognizant, be aware, and I'll see you guys in the next video breakdown. You all have an outstanding weekend. Coming into this next week's worth of price action, I'll make sure that I give you guys some brand new video uploads. I'm going to take a break for the weekend, digest the markets, and kind of just chill with my family and relax. I highly suggest that you guys detox and do the same exact thing. As always, be cognizant, be aware, and I'll see you guys in the next video breakdown.